Join me as I dive into the world of Bitcoin to see if it can really make your retirement grow and make you wealthier. Hi everybody, I'm Mr. Bitcoin Maxi. My channel is all about educating you on Bitcoin. So please consider hitting that subscribe button. I would greatly appreciate it. Now, let's get straight into today's video, and you may want to get a pen and paper ready for this, as it took me a while to research this for you all. Now, as we all know, planning for retirement can be a daunting task. We're constantly searching for ways to grow our savings to ensure a comfortable future in a world full of constant inflation. One investment gaining attention is Bitcoin. Some are wondering if it can play a role in their retirement strategy. A major concern with Bitcoin is volatility. It's true, the price can fluctuate rapidly, making it seem high risk. However, it's important to remember that volatility works both ways. The price can go up as well as go down. Another misconception is that Bitcoin is only for tech-savvy individuals. In reality, anybody can learn about Bitcoin and invest into Bitcoin. Some people worry that Bitcoin isn't a suitable retirement investment because it's not a traditional asset like stocks or bonds. However, more institutional investors are entering the space. This could lead to greater stability and mainstream acceptance. Now, many experts believe that a small allocation of Bitcoin in a diversified portfolio can actually help reduce risk overall. Another reason some consider Bitcoin for retirement is its potential for long-term growth. With a limited supply of 21 million and increasing demand, some people believe prices could rise over time. However, it's essential to do your own research and consider your financial goals and risk tolerance before making investment decisions. Now, let's explore how to incorporate Bitcoin into a retirement strategy. One option is a long-term buy and hold approach. Another is to trade based on market fluctuations. Disclaimer, I don't recommend this at all. It's also worth comparing Bitcoin to traditional investments like stocks, bonds, or ETFs. Now, for example, John, a 50-year-old investor, allocated a small part of his retirement portfolio to Bitcoin. He researched, understood the risks, and invested $10,000. Over a few years, his investment grew to $50,000. He then diversified his portfolio by selling some Bitcoin and investing in other assets. Now, Bitcoin can be purchased in an individual retirement account or IRA, but not through traditional brokerages like Vanguard or Fidelity. To do so, you need a self-directed IRA or SDIRA through a specialized custodian that allows investment in alternative assets. These accounts offer tax advantages but come with higher risks and fees. Here's how a crypto IRA works. First, open an SDIRA with a provider like Bitcoin IRA, iTrustCapital, or Alto IRA. Fund the account with cash or by rolling over from an existing IRA or 401k. Once funded, purchase Bitcoin through your provider's platform. The IRA custodian holds the crypto on your behalf using secure storage methods. There are three main ways to invest in crypto through an SDIRA. Now, one is directly through a crypto IRA provider. Another is through a Bitcoin ETF via a major brokerage. Now, I will leave the names in the description for what exchanges offer Bitcoin IRA ETFs and what exchanges offer SDIRA for Bitcoin. Now, I do want to mention an individual retirement account IRA is not a 401k. There are distinct types of retirement accounts, with the main difference being that a 401k is a workplace retirement plan sponsored by an employer, while an IRA is a personal account you open independently with a financial institution. While both offer tax benefits and are power tools for saving for retirement, they differ in who sponsors them, how they are managed, contribution limits, investment options. Now, I do want to inform you that you can buy Bitcoin with a 401k, but only if your employer plan offers for crypto investments, either directly through a digital asset account, DAA, or indirectly via a self-directed brokerage option with your 401k. Lastly, for experienced investors, an IRA-owned LLC can offer more control, but it involves higher risks and complex compliance. Potential benefits include tax advantages and portfolio diversification. However, consider the risks. such as high fees, volatility, and security concerns, and regulatory uncertainty. Now, Bitcoin can be a valuable addition to a retirement portfolio, but approach it with a clear understanding of its risks and opportunities. By researching, setting goals, and diversifying, you can make informed decisions about Bitcoin in your retirement strategy. Thank you for watching. If you have any thoughts on Bitcoin and retirement, share them in the comments below. I would really appreciate it. And if you are interested in learning more about Bitcoin, please watch more of my videos. I have about 3 on my channel. This is the 4th one, so I will be coming out with more. Take care, and I'll see you all in the next one. Have a good one.